What are you betting me?
What's your betting again?
I will.
Disable हो गया disable हो गया
एक मैंने तेरे को ही भेजा है निकाल लिया
नहीं
पानी गर्म कर दिया भाई।
प्रिंट क्या करना है? प्रिंट निकालना है?
प्रिंट निकालना प्रिंट।
खुल रहा है।
इसके अंदर 3-4 चीजें हैं। पहले तो जीएसटी वो जो है आईटीसी मिला लियो से।
5 लाख की
हाँ हाँ क्यों रहा है। फिर रजिस्टर 9 का नहीं, पहले सबसे पहले बैलेंस शीट अपडेट करियो, उसको सेव एज कर लियो अपने नाम में, ट्यूशन जो बना रखी है ना उसकी मत छेड़ियो, ब्रैकेट में अपना नाम लिख दियो सेव एज करके, बैलेंस ट्रायल बैलेंस से जो मैच करते। हाँ हाँ ठीक है। उसके बाद ये 5 लाख वाला देखिए, उसके बाद 990 टीडीएस टीसीएस में देख लूंगा, है ना। जीएसटी का तो देख ले, और उसका ये भी देख ले जीएसटी के जो बैलेंस थे हमारे वो एंट्री और रखे जो गवर्नमेंट से आते हैं टीडीएस, इसके अंदर देखियो ना, नहीं तो वो नोट करके रखिए जैसे इसके अंदर करिए हमने। ये है 3-4 चीजें, बैलेंस शीट और टीडीएस जीएसटी का, ये देखना चाहिए। हेलो, हाँ जी हाँ जी बताइए। उसके अंदर हाँ कर दूंगा, कोई दिक्कत नहीं, नो प्रॉब्लम। एक और आया है मेरा, उसको और दे दे। इसके अंदर एक मैंने वेब लिंक खोल रहा हूँ, इसके अंदर ले ले जिप्पा वेबिनार पे, मेरे से थोड़ी रखा हुआ है। ये तो प्रिंट कर दे एक बार। अच्छा अच्छा अपना वाला भी तो आएगा, इसमें से ले ले, जब मेरे पे से ले ले दोनों। तो अपना खोल के जो है वो ले ले।
वर्ड में टाइप करके प्रिंट कर।
अरे ऐसे कैसे प्रिंट कर दे,
ऐसे प्रिंट करूं?
हाँ हाँ क्या दिक्कत है तुझे, उसे कॉपी पेस्ट मार के प्रिंट दे दे। बड़ा सा करके दे, वर्ड पे कॉपी कर लेना।
सर मैं वही कर रहा हूं यार, आप कर रहे हैं मतलब समझ नहीं आ रही है आपकी।
अरे तू भी तो करेगा, ऐसे कैसे कर लेगा?
मैं कह तो रहा हूं वर्ड में टाइप करना, वर्ड में टाइप इसका
टाइप नहीं, कॉपी पेस्ट मार
तो कॉपी पेस्ट तो कर रहा हूं, टाइप कर रहा हूं तो कोई कहता है टाइप करने पे बोल रहे हो, कैसी बातें कर रहे हो?
कोई मेरा मतलब है भाई। दूसरा भी ऐसी आएगा, बस शुरू होने वाली है। बड़ा कर दे, बड़ा, बस निकाल दे, ऐसे निकाल दे बस। एक पूजा वाला देख, पूजा के उसमें है पूजा दालमीर, दामिर, पूजा दामिर। इसके अंदर ये लिंक दिया हुआ है, हाँ इसको खोल,
जूम लिंक,
जूम लिंक नहीं, एक और जूम लिंक नहीं है, जूम लिंक पे करेगा
लिंक पे।
हाँ हाँ, चुप का खोल, ये खोल के इसको जो है इसका, ये कौन सा अच्छा है
जीपा वाले से करो
हैं, किस चीज में कर ले, एक ने वो दिया ना अपना, पापड़ नहीं दिया अपना, वो नहीं दिया, मैं रहीशी फल मोड़ क्या हुआ। हाँ ये दे दे, कॉपी पेस्ट मार इससे नीचे का अबाउट, ये अबाउट वाला, बस 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 हो गया काम। और क्या करें? चलो यही बैठना पड़ेगा मेरे पास।
हाँ
चलो प्लीज,
वैलिडिटी लगा लो, वैलिडिटी होगा वो वैलिडिटी
बात हो गई इतना है। मिस्टर स्टैचू, a very cheerful morning to chief guest of the day of the happy Vasant Panchami. To all, to everyone. We memorize Vidya Devi Saraswati. On this occasion, we should remember, to Vidya Devi Saraswati on this Saraswati today. A very choose the panel of speakers. The panel speakers of the session, dear participants, I would like to welcome to all of you on the topic. First, friends, as you all know, recently IBA issued draft of the government of voluntary liquidation proceed ask for comments of various stakeholders on review of timelines and compliance certificate.
आज की क्लास होगी सर?
इसका भी लिंक बनाना है वो बाद में.
कितने बजे दिया? 6:30 बजे.
Financial order discussion of issue of freedom. We have Amogasha as speaker, Amogasha as speaker. Speaker will be introduced by for today's webinar for discussing about the possible amendments and there such. Also, we have Amogasha Mr. Hansachu. Chief guest today, so I welcome him. ये इसके बाद ये कर देंगे ये वाला इसका. अच्छा रिव्यू हो गया. स्लोगन we believe in to grow together with speed and accuracy and further we matter quality instead of quantity. ये हमारा हो जाएगा कुछ चीजें बतना बोल देंगे. Now I hand over. Now I hand over to our moderator of the day.
Welcome, sir. Good morning.
Good morning.
Thank you very much. Thank you very much. So, am I audible? Everything is okay?
Yes, you're audible, sir. You're absolutely audible.
Very well, very well.
जो क्या है दामिर
नमस्ते प्रवीण जी.
बिगलानी.
Sir, इसमें we have done a slightly change. आप भी थोड़ा बताइए कैसे करना है. जैसे what we are doing कि मतलब we are introducing all the panelists and then we are open for the further discussion.
And like, what is the total duration? So, how much time is available for the discussions?
It is 11 to 1. तो पहले थोड़ा सा discussion करके we will just and each panelist will take up one para and then they can discuss on those paragraphs and any contradiction views अगर रहेगा तो they can discuss.
And primarily, it is on the discussion paper.
Yes, sir. It is only on discussion paper. And if you can add on voluntary winding up or anything which is related to the issue, you can add.
Yeah.
Good morning, sir. Good morning, madam.
Good morning, Praveen ji. Namaste. How are you?
Coast.
Very well. So, like, what exactly is we should restrict ourselves to the amendments, proposed amendments. So,
very good morning to everyone.
Good morning, Anuradha ji. Good morning, Rahul ji.
Good morning,
Good
Rashmi. Good morning, Anil sir.
good morning, Anuradha ji. Good morning, Rahul.
Good morning, sir.
And happy Saraswati Puja to all.
Yes. Happy Basant Panchami.
Vasant Panchami is
Vasant
also
Panchami, yes.
today.
That's right. That's right.
And it's like weekends are supposed to be a little happier. Saturday, I think maybe. I love my Sundays, and that's what we are looking forward to. Sunday game.
You also work on Sundays also. Huh? I have attended many seminars.
But that's like first half of my Sunday is a golf game always, and then second
Yeah,
half.
second half, yeah.
కొంచెం క్లాస్ అటెండ్ ఆన్లైన్ క్లాసెస్ డైలీ నైట్
వెళ్ళాను చెప్పారు కదా
ఇంటగ్రేటెడ్
ఆయన ఏమంటున్నారంటే సార్ இது வந்து டாக்ஸே 8000 தான் வரும் அது கட்டி இப்போ ஏன் நீங்க போய் 1,50,000 நீங்க அதை இன்வெஸ்ட் பண்றீங்க
எதுக்கு 8000 வரும் கால்குலேஷன் ஏசி చేశారా
கால்குலேஷன் அவங்க போட்டாரு 10% தான் வரும் உங்களுக்கு இன்கம் எல்லாம் பார்த்தாங்க அது 4,500 ரூபாய் வாங்கியிருக்கீங்க விற்றது 1,05,500 ரூபாய்க்கு விற்றுருக்கீங்க அதெல்லாம் கணக்கு போட்டு இந்த 4,500 இன்னும் கணக்கு போட்டாரு 10% 8,000 rupees தான் tax வரும் உங்களுக்கு. அது நீங்க கட்டிட்டு போல எதுக்கு நீங்க 1,00,000 2,000 5 வருஷத்துக்குள்ள போடுறீங்க? உங்க ஆடிட்டருக்கு தெரியுமான்னாரு. இல்லை சார் அவர் சொன்னாரு, நான் கேட்டுக்கிறேன் சார்.
ఓ క్యాపిటల్ గెయిన్స్ వర్కౌట్ చేశాడు.
ఏదో కంప్యూటర్లో పెట్టి చూసి చేశాడు. ఆ డబ్బుగా వెళ్ళాను వాళ్ళు సార్ వేస్ట్ பண்ணாங்க சார் வயசான இல்லைங்க 5 வருஷம் லாக் அண்ட் பீரியட் போடுங்க.
இல்லையா நீங்க லாக் ஆன் பீரியட் வித் மை கிராண்ட் சன் ஆர் சன் போடுறேன். எனக்கு அப்புறம் என் சன்னுக்கு நேரா போயிடும்
చెప్పండి సార్.
అది మీరు రిటర్న్ ఫైల్ చేసేటప్పుడే చేయాలి.
అదే ఎవరో ఎవరో చెప్పండి అని చెప్పాడు. ఒకసారి మీ దగ్గర కన్సల్ట్ చేసుకోవాలి కదా. నేను వాటికి మీరు నడకుండా చేస్తే మళ్ళీ ఏం సార్ ఒక మాట అడగొద్దా అంటారు కదా.
தம்பி கோபி கேபிட்டல் கெயின்ஸ் వర్కౌట్ சொல்லிட்டேன். டாக்ஸ் ஓகே கட்டிடலாம். அட்வான்ஸ் டாக்ஸ் மாதிரி கூட கட்டிடலாம். லேட்டாக இருந்தாலும்
कौन सा सेकंड से बैंक खुला है क्या है? हेलो खुला हुआ है? तो वो बोल दो मैंने ट्रांसफर कर दी 60,000 पूरे। गरम आपको दो गरम पानी
गुड मॉर्निंग सर, गुड मॉर्निंग।
गुड मॉर्निंग, गुड मॉर्निंग।
कैसे हैं सर? नमस्कार, नमस्कार।
हाँ जी, हाँ जी,
सबका
नमस्कार
वसंत
अनिल साहब,
सबका
नमस्कार
वसंत
टू ऑल।
पंचमी की
अनिल
शुभकामनाएं
भाई
सर।
नमस्कार।
चूक साहब नमस्कार।
जी जी, नमस्ते टू ऑल, वन एंड ऑल।
यस सर।
Good morning, sir.
रश्मि जी शुरू करा दीजिए। ओके।
A very good morning to all of you. Myself, Rashmi Chowcharia, a practicing chartered accountant, IP and registered valuer. I welcome all the esteemed panelists and the attendees. First of all, a very happy Saraswati Puja and Basant Panchami to all of us. On this auspicious day of Saraswati Puja, we have gathered here to learn and relearn. As we all know, timely resolution and completion is the main crux of IBC. To address one such issue, IBBI had conducted a roundtable discussion with the IPs handling various voluntary liquidation cases on 21st August 2021 to ascertain the reasons for delay in timely completion of voluntary liquidation processes and the possible solutions to address them. The discussion paper throws the light on such issues and proposals from IBBI to sort this issue. IBBI wants the IPs to give their comments on the discussion paper by 22nd February 2022. And here we are today to have discussion on the discussion paper floated by IBBI on 1st February 2022, soliciting comments related to voluntary liquidation process with respect to two major issues, review of timelines and compliance certificate. Without wasting much of the time of the learned panelists, I now invite Pooja to start the session.
A very good morning to all the respectable personalities present here, the panelists, the committee members, and the audience. I am Pooja Meglani. I am working as a company secretary in Ludhiana and also recently qualified this IBC course. So today I got an opportunity to introduce GPA to all, as GPA don't need any introduction, but still, it's an association formed under Section 8 of the Companies Act 2013. It was established as an association of multidisciplinary professionals for the welfare of professionals, industry, and students. Two founder member of this association are Mr. Praveen Jain and Mr. Piyush Jain. Mr. Praveen Jain is a chartered accountant and insolvency professional and has done diploma in information system audit. Mr. Piyush Jain, he is an advocate and corporate law practitioner and also doing accounting and taxation practice. Now, I would request Mr. Praveen Jain to have few words.
Very good morning to all and happy Basant Panchami to everyone. We should remember to Vidya Devi Saraswati at this occasion. A very cheerful morning to chief guest of the day, Mr. Hansraj Chudri, and the panel speakers of the session and dear participants. I, CA Parveen Kumar Jain, would like to welcome all for the webinar on the topic panel discussion on the voluntary liquidation concept paper. Right now, friends, as you all know, recently IBBI has issued a draft paper for amendments of voluntary liquidation process and asked for comments on it from various stakeholders. Number on review of timelines and also compliance certificate. Hence, in order to have discussion on the voluntary liquidation for today's webinar, we have a panel discussion about the possible amendments and the whole process as such. And we believe in to grow together with the speed and accuracy. And further, we matter quality instead of quantity. Now, also we have almost Mr. Hansraj Chug, chief guest of today's webinar. So I welcome him. And Hansraj Chug is a fellow member, chartered accountant, fellow company secretary, law graduate, and insolvency professional. He has more than 28 years of experience in the professional practice relating to indirect tax, foreign trade law, including foreign trade policy, custom, FEMA, and banking-related law. He is founder partner in Messrs. ASHM and Associate Chartered Accountant, New Delhi. He is a Central Council member of ICI for the council term and has been nominated.
Check account number mobile number.
प्रवीण जी आपका माइक ऑफ हो गया है.
Now, he is a Central Council member of ICI for the council term 2019 to 22 and has been nominated as a vice chairman of the committee for members of industry and members, business and capital market and investor protection. He has also served the profession of chartered accountants as a member of an IRC of ICI for 2 terms and held the position as secretary during the period 2010 and 11 and vice chairman during 15 to 16. He is a regular speaker on GST, foreign trade policy, custom law, insolvency and bankruptcy code, banking and other economic issues of the nation on various platforms of professional institutions, educational institutions, PSUs, trade bodies, and promotional councils. Now, with this, we again welcome of all of you, and I hand over to Ms. Pooja for further proceedings. Pooja, please.
Taking it as an opportunity to introduce the committee members. Committee members are IP IK Goyal ji, Advocate Rahul Gupta ji, and R Praveen ji. So IP RK Goyal ji. He is a former top management executive of Bank of Baroda, having an experience of 38 years in banking industry. Currently, he is practicing as an insolvency professional, handling 5 assignments. He is having rich experience in corporate insolvency resolution services, legal advisory, enforcement and recovery, and stress asset management. He is empaneled as an insolvency professional with all public sector banks. Madam Rashmi, if you can introduce.
Rahul Gupta is the organizing committee member. He is an advocate and a company secretary and has been handling indirect tax, commercial negotiable instruments and insolvency matters for various clients all over India. His area of practice covers bouquet of legislations comprising of IBC, VAT, GST, Central Excise, Service Tax, Commercial Court Matters, and the Companies Act.
Praveen ji is the another panelist, another committee member, sorry, and he don't need any introduction as such. All of you know him very well.
Thank you.
So here, Rashmi ma'am.
Now, without wasting much of the time, we will open the forum for discussion. And it is my esteemed privilege here now to introduce the panelist. The first panelist is CA and IP Anil Goyal. Just a moment. CA Anil Goyal is founder and chairman of AAA Insolvency Professionals LLP, one of the first 2 insolvency professional IPE recognized by the IBBI. He is a regular faculty and speaker at various forums and webinars on IBC law with IBBI, tax authorities, DRT members, banks, and financial institutions. Training workshops and pre-registration education course for new insolvency professionals by IPA's SBI Academy, ICA, and GIP Extra. He has also founded a AAA Capital Services Private Limited, AAA Valuation Professionals NDI LLP, and he is also a partner in Mrs. AAA G and Company LLP Chartered Accountants. Another panelist is CA IP Snehal Kamdar. CA Snehal Arvind Kamdar. Just a moment.
Hello.
हाँ, hello.
आप इनको जो है अरुणचुक जी का पहले करा देना जो है इसमें
परवीन जी आप कुछ बोल रहे हैं क्या?
Yes, मैं बोल रहा हूँ. क्या बोल रहे हैं?
Okay, so now continuing. C.S. Snehal Arvind Kamdar is a senior partner in Mrs. Jain Jagwat Kamdar and Company Chartered Accountants. He has been associated with SME segment and with the associate merchant bankers have been instrumental in bringing about more than 10 SME IPOs. He is a member of Insolvency and Bankruptcy Committee of WIRC and has been a regular speaker at ICI and other forums on insolvency valuation and relevant related topics. I welcome Ms. C.S. Snehal Arvind Kamdar. Pooja, can you just give introduction on another panelist?
Definitely. Another panelist is IP Vijay P. Lula. Mr. Lula is a chartered accountant. He has done his DIRM course conducted by ICAI successfully and is a registered insolvency professional. He is a founder, promoter, and director of Virtusco IPE Private Limited, which has IPs from Delhi, Amritsar, Ahmedabad, Mumbai, Bhubaneswar, etc. He is impaneled with most of the banks as an IP, like State Bank of India, Bank of Baroda, Central Bank of India, Punjab National Bank, etc. Besides, he advises various resolution applicant on their resolution plans. Another panelist is IP Atul Mittal. Mr. Mittal is a chartered accountant, company secretary, BCom honors, and an insolvency professional with over 30 years of experience in manufacturing industry, which includes steel, auto ancillary, packaging, garments, and FMCG sectors. As CFO and CS headed the corporate finance and compliance function and international stint for 6 years in Indonesia. He is actively involved in creating corporate and financial structures and implementing corporate governance. Another panelist is IP Anuradha Bisani. CS Anuradha Bisani is an insolvency professional, a fellow member of Institute of Company Secretaries of India, and holds a master degree in commerce from Osmania University, Hyderabad. She has a rich experience of more than 20 years in diversified sector of business. Anuradha Bisani and Associate was founded by Ms. Anuradha Bisani, and his firm is providing advisory, consultancy, and corporate secretarial legal services to the companies across the geography and industrial domains. So now I would request all the panelists to have a discussion over the topic of liquidation. I'll share the screen for. Here is the discussion paper on amendment in IBBI Voluntary Liquidation Regulation 2017. I would request all the panelists to take the lead and let's start the discussion on this.
Okay, thank you very much, Pooja, for introducing all the panelists. Let me start this discussion from the review of timelines, which is part A of the discussion paper. So, like, it's not something that we would read para by para. So, in case you can allow me to share the document, so we can actually reach out to the relevant paragraphs where the discussion is
Pooja, you can
going
stop
on.
sharing the screen.
And you also have to allow me the sharing of the screen.
Yeah.
To all the panelists, let us try to see, first of all, yes, please.
Yeah, I think before the panel starts, let me also have a few words with each one of you.
Certainly, Chupka.
Sorry to be there in between. Pooja and Rasmi have started so strongly, and such a huge panelist. Naturally, I can understand all the resource people or all the intellectual power with us. The GIPA Professional Association is doing wonders for the development of the intellectual power within our country. And naturally, more particularly today's program focused on the exposure draft, or rather concept paper, whatsoever has been given by under the IBCC, that has to be understood with in thorough. And today, fortunately, very learned personality like Anil Goyal ji, Snehal Kamdar ji, Vijay Lulla ji, Atul Mittal ji, and Anuradha Bisani, they are there to discuss on this forum or discuss on this system. So that naturally, if there is a saying, ki deliberation and the discussion, if done in a fair manner, so that opens up the mind and that gives the better idea to be given to the stakeholders or to the originator of the whoever wants the inputs from the different resource people. I'm fortunate enough this my friend Parveen Jainji has evolved so many good ideas of bringing the power together, intellectuals together, so that better service can be given to the society, better service can be given to the corporates, better services can be given to the government also and the other stakeholders also. I'm very grateful and thankful to the Parveen Jain and team, GIPA Professional Association, for inviting me here. Those are the initial remarks from my side, because I have some other engagements also. So I'll stay back for a few minutes. Then I have to be leave for some our ICI's meetings also. So thank you, Parveen Bhai, for inviting me here, and hope this professional association GIPA will be continuing to serve to the professionals and to the society and to the different stakeholders in the best of their manner. And I'm very thankful to the whole of the team of the association also. Thank you very much.
Thank you, sir. Thank you, for your valuable time provided by you. Thanks a lot, sir.
Thank you, my dear friend Hansraj ji. So you actually have started it very well, and I think this association needs blessings of the Institute of Chartered Accountants also. And in case, since you are the person now sitting on the hot seat, so this association can also conduct some of the programs in association with the Institute of Chartered Accountants. And therefore, the subject that we have chosen today is a subject which is in circulation. The IBBI has already issued a discussion paper on some amendments which are proposed in the voluntary liquidation process. So the panelists, in case we start with the kind of clause by clause discussion, that I don't know whether, because see, there are many paragraphs of this discussion paper which is only kind of facts which needs no discussion. So in case the organizers can allow me to share the screen, so we can quickly move on to the paragraphs where the discussion is going on. So maybe let me see if I would not be able to.
Also say that all the time we are hearing non-complaint that 70 years 70% आपने किया क्या 70% आपने किया हाँ 70% में हमने नहीं किया कुछ नहीं किया लेकिन बीजेपी में क्या मैं इसको एक हमारा गांव में एक कहावत है ना तो कहावत क्या है
I think some
voices coming.
Request all other members to please keep themselves on mute. And Anilji, are you able to share the screen?
No, I think you have to make this because this is a Zoom.
Parveen ji, kindly make Anilji co-host. Anilji, now I think you are able to start.
Yes, I'll be able to do that.
Now host, yes.
And also I request Praveen ji, आप mute कर दीजिए सारे जितने भी participants हैं, except the panelist हैं, so that the unnecessary sounds can be stopped.
Yes. So to all the dear panelists, as far as see, when we go to this part A regarding review of timelines, the first few paragraphs is the kind of scene where they have provided, the IBBI have provided history. The problem is that we have so far 1,105 voluntary liquidation processes which has been initiated till 31st of December 2021, and out of this 546 cases have submitted their final reports, and in more than in like more than 50% cases which is already gone beyond 1 year time mark. So this is the problem in hand, and IBBI and all the stakeholders are trying to find out the solution for this problem in hand, because see, the basic concept is the company should be liquidated quickly and it should be liquidated efficiently. So that's the basic objective that we have to achieve. So even in the liquidation process, the period suggested earlier was 2 years, but now it has been reduced to 1 year. By just reducing the period from 2 years to 1 year, we have not experienced any the process has not quickened. No efficiency has been added into the process. Rather, there is another requirement that after 1 year, we actually have to apply for the extension. And one more application is now required to be made. By just reducing the timeline in the regulations, by just reducing the timeline in the regulations, I am sure that it is not going to help the quicker liquidation. So one of the issue which is supposed to be is the IBBI has tried to handle it by way of issuing of a circular, which I feel that issue of a circular is something which is just part of it. The IBBI have issued a circular on in November 2021 that the liquidators are not supposed to ask for a no objection certificate or a no due certificate from income tax department. However, there has to be some provision. There has to be some provision. How do we handle the pending assessments? How do we handle the pending appeals? How do we handle the because see, like till the time the company is operating, maybe there is an income or not, the company is supposed to file returns of income, returns of GST, and even otherwise the various returns of TDS, even some of the custom obligations. How do we handle these obligations? Just by reducing the timeline in regulations, would it help? I open the discussion on this on this subject, and this is the proposal which is given. The timeline proposal, which is it is basically it is now proposed that this timeline for preparing the list of stakeholders that may be reduced to 15 days from the last date of receipt of claims. And this is one requirement. And earlier it was the liquidator shall prepare the list of stakeholders within 45 days from the last date of receipt of claim. From 45 days, it is 15 days, and that is also in case there is no claim from the creditors. Then it is 15 days. So to all the dear panelists, would it really help in quickening the process of dissolution of a company under voluntary liquidation? I think I will reach out to the panelists for the discussion.
Sir, well, basically what I would say is that it will not really help, because what they are proposing in this is that where no claims are received.
Yes.
Now,
Yes.
one important part that is required to be understood that in case of a voluntary liquidation, the company is a solvent company.
Yeah.
That means it can pay its debts. So wherever there are some creditors, instead of having a process of going for claims, you should directly take the balance claims as per the last available audited balance sheet of the company on the date of liquidation and make a statement and pay them all. And if at all still IBBI wants that a claim should be called from the stakeholders, then a claim form should be given, and most of the claims, if they come within that same thing, it can be considered. Otherwise, we should simply go by the list of stakeholders given by the corporate and its balance sheet. That is the only way we can save time. Otherwise, we will have various alternatives. Suppose someone gives a claim, someone doesn't give a claim. Then again, we fall back to the same earlier provision of 45 days. But that also will be incomplete because some people have given a claim. What about those who have not given a claim?
So in case the, yes, I think there is a provision like in the case of workmen and employees, that in case there is no claim received from any employee, but there is a liability shown in the books of accounts, that has to be admitted by the liquidator. That is the obligation. That is the obligation of the liquidator, and there is a word used, shall. It is not even may. So there is a obligation. However, in other cases, unless a claim is made, the liquidator how can the liquidator admit a liability? Because along with the claim, so all the documents will come. The verification of the claim would be done by the liquidator. So the claims are required. Without claims, no liquidation process can be concluded. Otherwise, there may be many other people who may come later on that the promoters and the liquidator, they have connived with each other, and their claim and their obligation has been left out. So this allegation would continue in the courts for more years. So the process of tweaking would, the objective would fail. Let us take the opinion of other.
But over here also, but they are saying that where no claims are received, the liquidator should prepare a list of stakeholders within 15 days.
Yes.
If there are no claims received, what is the stakeholders list that you will prepare?
No, see,
You
like
have to go back to the balance sheet.
in voluntary liquidation, the liquidator will also get claims from the preferential shareholders or from the equity shareholder, because see, there is another form which is provided for other stakeholders, because see, like and also for the contributory recovery has to be done. But the list of stakeholders, to my understanding, in the case of voluntary liquidation cases, would also include the preference shares and the equity shares, or any kind of or any class of shares. They are the stakeholders, to my understanding.
Anilji,
Yes.
rightly said on this, but the key aspect, as you read previously also about income tax NOC and the assessment, pending assessment. If you go through the things, the circular is issued by IBBI, but there is no change in income tax and the relevant acts. Now, if you go through the law, it clearly states that the responsibility will be on the liquidator if any liability arises till that period and liquidation is not carried out. IBBI resolves us from the liability on that NOC part. But if the assessments are pending, and if there is even PF applicable, PF authorities does not allow us to close the things unless there is a NOC from income tax to them, given to them also. So it's a portal. There also it's a completely e-portal of PF. If I want to cancel the PF number and authorities we approach, the other departmental NOC is required there. So there are technical issues on this. And as far as this gets connected with the claims, the departmental claims does not come in that 30 days time, which after the publication of act. So now if we go ahead with the proceeding without their claims, knowingly that the assessments are pending, the big question arises on the liability on the liquidator, which is unaddressed.
So what Mr. Kamdar is saying, that it is the liability of the liquidator. So we will discuss it later. I will reach out to Mr. Atul Mittal. What is his opinion on this timeline part of it?
See, this 15 days is, I think, very, I would say, very short time, because the claims from in a voluntary liquidation, creditors' claims are not much. So creditors' claim comes on time. The shareholders' claim also comes on time. But the real issue is with the statutory liabilities, especially the income tax, GST, or even the PF liabilities. So these claims will not come. And if these claims are not coming, still preparing the this stakeholders list in 15 days would be a challenge, I feel. So, because what my real concern is that if you look at the existing provisions of law, they are good enough. Means unnecessary putting pressure on cases which are getting completed on time is not helping out. We have to actually look at cases which are actually getting delayed. I'm not able to understand why cases are getting more than 1 year delayed. So I would prefer that 45 days. See, 45 days is good enough time, but 15 days would be slightly, as per me, would be a very tight schedule.
Okay, so I think Mr. Atul Mittal says that this 15 days, which is proposed to be reduced, this may not be sufficient, even if there is no creditor. So 15 days, we need to discuss this. 15 days is not sufficient, is the opinion which is coming from Mr. Atul Mittal. So, see, Atulji, thank you very much. Like, let me reach out to CS Anuradha Bisani, and let us take her views also on this subject, whether this reduction of timeline would really help in quickening the process of dissolution, or there are different problems rather than one or two, like list of stakeholders or the time allowed for or distribution. These are the two amendments. One is the shortening the period for preparation of list of stakeholders, and the second is shortening the period for distribution of the proceeds from the assets. These are the two proposals, and accordingly the total timeline is now proposed to be reduced from 1 year to 90 days, and in some cases to 70 days. This is the total overall proposal. So let us seek the opinion of Anuradha ji.
Yes, sir. Sir, I feel this is a welcome move. The time period is reduced from 45 days to 15 days in cases where there are no creditors. What is happening, because I've handled 2 cases myself, so I know that, these are just the statutory period of time which I'm supposed to wait, whether I have anything to do or not. So here they are saying where there are no creditors. They are not saying that if you receive the claim, then there are no creditors. They are just saying if there are no creditors, after you have given the ad also, then the preparation time for the list of stakeholders is 15 days, which I feel is quite good enough.
So I think this is a good input from Anuradha ji, that this time reduction, it is not in any case harming. But Anuradha ji, whether it will definitely help in quickening the dissolution,
Sir,
or
quickening, sir,
because
dissolution,
ultimately the objective of this discussion paper is that as if it is targeting at quickening the dissolution process. So these are the two things that they have said. One is the, for the even sake of clarity or maybe repetition, the list of creditors, then the distribution, and then the preparation of final report. So these are the things which are proposed to be amended. So in case we see this, these are amended in such a manner that the 90 days and 270 days. So as you are saying that, like, reduction where there is no creditor, I definitely, and personally, I agree with you that this doesn't need 45 days, because see, as far as this stakeholders, like as far as the shareholders and the preference shares or any class of shares is concerned, the information definitely would be available with the company, and that list of creditors can be prepared from the list of the information available, because those are the things which are not changing every day. So, so therefore, the list of creditors, if it is not there, then
Anilji, sorry,
yes,
what needs to be understood is now in this thing, what they are working on, IBBA is looking forward is like reducing the timelines. So voluntary liquidation where no creditors, no claims, voluntary liquidation where claims and creditors are there. Okay, now the question again arises, no creditor includes statutory authorities, claim or not? Because most of the companies which will go into voluntary, they have recommended in the working paper, this paper also, that it is advisable that the liquidator to take the assignment after everything is through. But many a time, most of the assignment which they have listed, it is the work has been stopped, company has been closed down, no work, business is on, only statutory assessments are pending, that too filing and everything has been done. So here the question arises when you say no creditor, and is the assessment, that means the company has to wait to go to voluntary liquidation till the time all assessment and everything gets over, and then only go for the voluntary. That itself defeats the purpose of voluntary liquidation, in my view.
So, Mr. Kamdar, this is a very good discussion that you've started. whether income tax department or GST department or service tax or customs department can file their claim before even the start of the assessment proceedings? No, they cannot file their claim unless a demand is raised. And the second question is, like, in case assessments are pending, can really the company be closed? This is the second question. Can company be liquidated when the assessments are pending? And in case yes, then who will take the responsibility? Who will take the responsibility? For this reason, I will actually take all of you to the voluntary liquidation regulations. Now, the regulation says, when we actually try to verify the claims, it says the determination of the amount of claim. I'm reading regulation 24. Where the amount claimed by a claimant is not precise due to any contingency or any other reason, the liquidator shall make the best estimate of the amount of the claim based on the consultation with the claimant and the corporate person and the information available with him. So that actually means that there are contingent claims also which would be available, which will be received, and there would be some claims which may arise later on. While the liquidation process has been started, some assessments might even get completed. Some GST assessments might even get completed. Now, saying this, that the liquidator should take up the job when every compliance has been completed. Now, I think in case there is any GST appeal pending, that will take 4 years. In case any service tax appeal is pending, that will take 4 years to get concluded. So can it be said that if a company wants to get liquidated or wants to get dissolved, they would wait for all the assessments? No, in case I wait for all those assessments, then the new returns will be filed. And if I file a return today for assessment year 21, assessment year 22, 23 or 21, 22, then I'm liable to tax whenever the assessment order would be passed. So I found a solution to this.
Yeah.
So I found a solution to this, and that solution, although it is not there in the regulations or it is not there in the code. Now, in case we go and see what kind of form I has been proposed, what kind of form I has been proposed by the IBBI. Now, this is the form I, which is a compliance certificate. Now, in case this compliance certificate deals with everything, like intimation was sent to the statutory authorities. So in case we just see all this, PF, ESI, income tax, inspector of factory, GST, VAT, RBI, others. So in case we see this, there is a possibility that the company has sent some amount in foreign exchange for some import, and the import has not been done, and there is an outstanding foreign remittances which is still to be handled. The inspector of factories and the provident fund, ESI, all these are something which there is a possibility of any demand which can actually get created later on, which can be a part of the responsibilities of the liquidator. Now, the only thing that this particular form has proposed in their clause number 9, all undischarged matters pending, if any, before any court or tribunal relating to corporate person has been reported to adjudicating authority, along with the details of provision made to sufficiently meet the obligations arising from such pending litigations. So this is the only thing that I found in the entire process of quickening the liquidation processes, that if in the final report, in case we as a liquidator, along with the corporate person, if it is decided that the income tax assessments, GST assessments, provident fund assessment, everything would be handled by the directors or the stakeholders. Like there should be name of some of the stakeholders who are getting the distribution from the liquidation process, and those names personally would be responsible to handle all these assessments, matters pending before any court, matters pending before any tribunal, and details of the provisions made to sufficiently meet the obligations. So those people who are actually getting the disbursement, they should own the responsibility, and it should be recorded in the before the adjudicating authority, that they would be responsible, and there are provisions which are made to sufficiently meet the obligations. There is a possibility that the court even might say that you should keep some amount which is earmarked for these liabilities, which are contingent. Other than this, I have not found anything in the IBC. I have not found anything in the regulations. Now, discussions are required. Yes,
one more point here. I just like to add. What you said on this point is all with respect to when we look IBC alone as a law. When you are talking of any pending assessment, we are talking of a person as such, the directors, when they in the EGM, they file their solvency certificate is always given. And that affidavit clearly states that if any shortfall is there, the one who is issuing solvency certificate will be making the payments in case of shortfall in voluntary cases. So that covers, but the liability of the liquidator, where when you see, it says that the liquidator will be liable in case of distribution made without assessing. When you went to the regulation where we discussed on the assessment, or where we made a provision for the claim, contingent claim, probably the contingent claim and the income tax or this statutory assessments can go anyway. Like I will share one matter where we have a transfer pricing issue where APA has been there. So there is 2 countries who are going to come out with a transfer pricing model which has to be applied in the transaction. Since 2013, this has been on, and they have not conclusion between the 2 countries, but all the assessment are done as per the proposed APA. Now this takes long, and as a liquidator, when the company gets dissolved, the legal tangle comes is that when the company is dissolved, the assessment cannot continue under income tax or any other regulation till the amendment in that act says that after dissolution you can continue to recover from the directors. Now this is a gap between the 2. One side we are looking at IBC alone, but the income tax authorities and all does not have the relevant amendment to recover the money in case the company is already dissolved from its director. So this gap remains open. And apart from this, my worry is as a liquidator, what is my liability in all these things, which is still unanswered in all the cases.
I think, Mr. Kamdar, I have not seen that the liquidator is responsible for all these liabilities which might even come later on. So one thing is very sure, that the claims are not filed, and if the claims are filed, the liquidator has taken care of. Now we are talking about those things which are not a liability as on the date of commencement of liquidation process. We are talking about something which may come as a liability on the company during the liquidation process in case the liquidation process is not closed. So it is difficult to say that the liquidation process would close in 4 years, because the assessments of GST, assessments of tax, this might take a little longer. So this is the only way that we can say that the assessments can actually be completed by some people, and there is a provision made. Otherwise, the company cannot be closed. Otherwise, for every year, the returns are supposed to be filed. For every quarter, GST returns are filed, and the company is exposed to liability of assessment and a demand out of it. However, I think I need from the other panelists, is there anything that you have seen in the regulations or in the code that the liquidator would be responsible for making these liabilities met? Unless, because the liquidator only has to report that all the pending matters to the adjudicating authority. So it is the duty of the adjudicating authority to see whether proper provisions are made or not before passing an order for liquidating the company. According to my understanding, the liquidator is not personally responsible. He is only responsible to share the information, disclose the information to adjudicating authority. And the adjudicating authority would make appropriate arrangement, sufficient provisions, also obligations, and then only the company can be liquidated.
Anilji, in this, I would like to share that what you are saying makes absolute sense. But the problem is that once the liquidator comes into the shoes of the directors and he has sent the intimation to all statutory departments. Now, after the liquidation of the company, if there is any liability coming, so those departments are going to write to the liquidator. They may not pursue with the adjudicating authority or with the directors or the stakeholders who have received the money under liquidation. So how do we manage that?
No, writing to liquidator, asking information, that is one part of it. But making the liquidator personally responsible for payment, this is a second part of it. As a liquidator, definitely we are supposed to answer all the litigation, we are supposed to attend all the litigation, we are supposed to reply to all the notices and requirements of information. But how does it come as a liability of the liquidator? That is something which needs to be discussed. In my personal opinion and in my understanding, the liquidator is not personally responsible for any liability of the company. The only responsibility of the liquidator is to conduct the process, disclose all the information, do not hide anything, and do not miss any claim, whatever has been received by him. Yes, please, Anuradha ji.
Yes,
you
sir.
wanted to say something.
I was just telling, now we have to look at for the purpose of voluntary liquidation, a liquidator has to be considered only as a facilitator. Unlike in CIRP and liquidation, the regular liquidation process, where the liquidator or the IRP or the RP steps into the shoes of the board of directors, where the board of directors are suspended and all. Here, that is not the case. Here, we are just facilitating the process. We are appointed as a liquidator and facilitating the process. So the personal responsibility which Mr. Kamdar is referring to, I think that will not arise, since the directors have given their personal affidavits also. Correct me if I'm wrong.
No, I think Anuradha ji, I will actually, I will take you to section 59 of the code, which deals with the voluntary liquidation of the corporate person.
Sir.
And when we see this, it is very clear where I'm highlighting this part. It is very clear in the code that section 35 to section 53 of the code is applicable to section 35 to 53 of the code is applicable to voluntary liquidation also. When we see the section 35 to 53 of the code,
right,
that means that the entire liquidation process, let us go to section 33. In fact, this 30, see, like it is saying that section, sorry, 35, because this 33 is only initiation and 35. Now, when we see this powers and the duty of the liquidator, that is applicable to the liquidator of voluntary liquidation. 35, let us see even 36. So I actually have some other document which I can actually share with you. So this, in case we see this, let us see what is applicable and what is this law. Let us see this. Section 35 is powers and duties of the liquidator. 36, liquidation estate. So liquidation estate is similar to what we have in a normal liquidation. Powers of the liquidator to access information, consolidation of claim, verification of claim, admission or rejection of claim, determination of the valuation of claim, appeal against the decision of the liquidator, preferential transactions and timeline, orders in case of preferential transaction, avoidance or of undervalued transaction, relevant period for avoidable transactions, application by creditors in case of undervalued transaction, order in case of undervalued transaction, transaction defrauding creditors, extortionate credit transactions, order of the adjudicating authority in respect of extortionate credit transactions, secured creditor in liquidation proceedings, and distribution of asset. Now, what is missing? Like 43 is applicable, means a preferential transaction is applicable, undervalued transaction is applicable, 49 fraudulent transactions are applicable, extortionate transactions are applicable, and since section 66 was not covered, so the regulations have covered that even for fraudulent transactions, the liquidator is supposed to report. So I have not seen any difference in the position, status, duties, liabilities, rights of the liquidator when we compare these two liquidation processes, voluntary liquidation and a normal liquidation. This is absolutely applicable. It is no change, no status change in these two processes. The liquidator is responsible. The only thing is that the liquidator doesn't get much fees in the voluntary liquidation cases, and the other cases it is better. So this is the understanding that I have over it. I think let us discuss this. So the discussion is that the liquidator is responsible for everything, but liquidator is not personally responsible for making payment of the liabilities. He is only responsible for disclosing it, making a provision, and whatever the adjudicating authority finally decide, the company can still be liquidated. Yes, please.
The issue which comes in is that suppose you made a provision, and that provision at the end of the day is not sufficient to meet the liability. Then what happens?
No, the what I'm trying to say that the present law does not have a provision that this can be one of the resolution, that since the contingent liabilities, the contingent claims, estimated claims, how do we resolve that? One option is that we should keep the company as under the liquidation for 3 years, 4 years, which is not the intent of the law. Even the finance minister has said in this particular budget speech that the exit from business, quick exit is the requirement of the world. It is not only a requirement of India. The people should start business and they should not stuck up. They have a right to exit. So similarly, the companies should be liquidated quickly. So therefore, this is the only provision that the stakeholders who have taken the distribution, they should be responsible. So in case the provisions made are not sufficient, then the stakeholders are otherwise also responsible to pay. Because see, the only thing that they can restrict their liabilities to the total amount of distribution. They cannot exceed. They cannot exceed
just take a minute, Mr. Goyal, over here.
Yes.
The basic problem is what? That under voluntary liquidation, the company is solvent. So all creditors expect to receive full payment. Now, if I have made a provision, I would have say I have made a provision for income tax of say 10 lakh rupees. And I have distributed the balance. I've got 40 lakh rupees. I've distributed to the various other stakeholders, including equity shareholders or preference shareholders. Now, after I've done that distribution, tomorrow if the income tax liability comes to 20 lakhs, I cannot go back to all the shareholders and take that money. Nobody can do that.
No, Mr. Vijay.
And at that stage, the tax department will say, no, this is a liability which is outstanding. Somebody has to make a provision. Somebody has to make a payment. Unlike in the case of a liquidation or a CIRP where the claims get extinguished, since there are no sufficient assets. In this case, this may not happen. And that there exactly will be where the entire problem will come up if we try to do it in a curtailed time period. Or alternatively, what we can suggest to IBBI is that there should be a specified time limit within which the departments should give their claim to the voluntary liquidator within an X amount of time after he makes an application that the company is going under voluntary liquidation.
No, but
30 days, 40 days, 60 days, whatever it may be.
No, but Vijayji, in that case, there may be a situation where the department raises an amount which is higher than the net worth of the company, and the company can no longer be liquidated voluntarily.
But if you receive a demand, you can always verify it. Because at the end of the day, you have to verify it and then accept it.
So, Vijayji, I see like normal circumstances. Yes, Mr. Kamdar. Yes, please.
Sorry, Vijay, it is not that you have to verify. In that scenario, if the demand is raised, then again you have to follow the process of that law where you have to go to appeal in case you are not accepting the demand. So it's again a loop in which we are getting. But what I foresee from what Anilji took us through on various regulation and all, probably amendment on that lines that whatever assessments are pending or statutory dues are pending or any contingent liability, if any, that is there in the company for which the claims has not come in 30 days as per the timelines to the liquidator gets absolved of his liability of distributing from whatever he has to the people whose claim has come. the disclosure to that effect of the contingent claim be put to adjudicating authority. Company may be kept running without order that no further things like what we have different companies thing now, where the company can be we can go to ROC and declare the company is defunct for, and then again revive after 5 years whenever we want. Similar type of things, that no assessment, only pending assessment to be completed before the dissolution order is pending. So the RP gets the liquidator gets relieved when he submits his final report with disclosure. The dissolution order only comes after the assessments are over. And in case of contingency in that assessment, the solvency certificate giver is given the liability to pay in case it is above the provision, because that provision, as Anilji rightly showed us, that it is in consultation with the company. So in that, when we are doing it in consultation with the company, the Ernest Oil management, I think that should resolve this question and this cycle which we are getting into. But yes, company dissolution, in my view, it is like if a dissolution order is there, assessment cannot continue for sure. And this is going to be a serious challenge in closing the company in 1 year. And what in current budget, the madam expects to complete it in 6 months without the assessment getting over in that period.
Anilji, I would like to ask that, as suggested by you, if we take a undertaking from the stakeholders who are receiving the money, basically the equity shareholders, and then we attach it along with our final report, along with the statement of current of the contingent liability, stating that these are the contingent liability and this is the provision what we have made. So, since we are distributing it to the stakeholders, and these stakeholders have consented to take care of these pending assessments. So I think that should be compliance of law, and then the dissolution order can be passed by the NCLT. Is my understanding?
This is what is my personal opinion after reading through all the regulations, code, and the proposed discussion paper. The intent seems to be that you should place all the pending issues before the adjudicating authority, make appropriate provisions, and you can go ahead in dissolution of the company. Now, one question which was raised by Vijayji is that in case it increases the amount which has been distributed to the stakeholders, that actually means that the liabilities of the companies were more than the assets of the company. So therefore, the company was incorrectly liquidated as a voluntary liquidation. So this actually becomes the case of normal liquidation, and there is a provision somewhere, I am not able to recall as of now, maybe my panelists will help us, that in case during the voluntary liquidation, in case the liquidator feels that the company is not able to meet its liabilities completely, then the liquidator can convert it into a normal liquidation process. I think that provision I have to find out. Maybe that's some.
I think Anilji, that is in case of pre-pack becoming normal CIRP, but in voluntary liquidation, I don't think this provision is there.
Anilji, this provision is not there in voluntary because you have taken a solvency certificate where the director is taking onus in case of liability more than the asset he will pay from his sources. If you go through the solvency certificate that he issues, this is clearly mentioned that. So it does not get converted into the liquidation, but yes, there have been around 6.
Sorry.
So
we've lost you in between. We've not been able to hear what you're saying.
Voluntary liquidation, where the liquidator voluntary liquidation was taken and the withdrawal has been filed. The reasons for withdrawals were different. One, the company which was solvent and they thought that the company will not be able to get further business. They filed voluntary, but now there seems that there is a huge opportunity, so they want to withdraw. Another was the case where they have gone for the withdrawal, where the company was solvent, but COVID started and the company assets were not enough to pay off the liability, and the solvency certificate the director who had given, they had given the solvency as on the date of the balance sheet, where that time the assets were available to pay off the liability. But due to this unavoidable circumstances of COVID, the realization of value of the asset was much lower, and in view of which that was there. So there they had gone to adjudicating authority for withdrawal of the asset, voluntary liquidation. And in that scenario, the liability of the directors who have given solvency was to be resolved. So this is yet to be decided by adjudicating authority. But around 7 matters of withdrawal are pending with adjudicating authority, to my understanding on these lines.
So where is this?
Sir, Form H also gives a provision of any legal disability. For withdrawal, it gives any legal disability as one of the clauses there.
Right.
I'm trying to find out.
It's Form H, sir.
So I'm now
Just scroll
reaching
down.
out to Form H. So now I want to see, this is the deposit of.
This is G, sir.
This
Next
is the Form G, withdrawal under Regulation 39(7). So where is that solvency certificate, Vijayji?
Solvency certificate is taken at the start of the assignment. No, sir.
No, is there any format for that?
That is mentioned in the section itself, section 59.
No, a section, I've seen the section, but then I have not seen that particular content which is stated by you.
It mentions what declaration the directors are supposed to give.
No, this is a declaration which only says that they have made full inquiry into the affairs of the company, and they have formed an opinion that either the company has no debt or that it will be able to pay its debt in full from the proceeds of the assets to be sold in voluntary liquidation, and the company is not being liquidated to defraud any person. So I have not seen any commitment from the directors that they will pay from their own in case their declaration becomes wrong later on. They are not supposed to pay from their own side, because otherwise also the directors, how they should own the responsibility. Tomorrow there is an income tax order generating 100 crores of demand. So that is not seen somewhere that they are personally responsible for giving such solvency certificate. It is only in case the only resolution, that the only thing that I found is that in case the company is not able to pay its debt, then there is an application for withdrawal. So once the withdrawal is done, that means that the company is a normal company. Somebody else will file CIRP, and then company will go to liquidation. So there is nothing in the law that actually makes the directors who are giving this solvency certificate personally responsible. No, what is being proposed here by way of Form H, that this is a via media, that if stakeholders who have got the distribution, in case they can say that yes, we would be able to pay up to the amount of our distribution in case there is any liability which comes out of the unsettled liabilities, or in case any liability comes up in future. Then adjudicating authority may think that the dissolution order can be passed. However, the responsibility of the directors who are giving declaration is limited. It is not unlimited. Yes, yes, Atulji.
Yeah. So, but the thing is, then it can open. See, the voluntary liquidation is started with the authority of the EGM. So then EGM can pass a resolution, and in case they find that the company is no more solvent, so they can file a resolution to withdraw from the voluntary liquidation and get necessary approval. Now the point is that if the company is allowed to, means the directors are allowed to get away with it, the shareholders are allowed to get away with it, the liquidator gets out, is allowed to get away with it. So maybe voluntary liquidation may become a sort of a instrument to actually fast track some of the cases which may actually not be otherwise coming within the purview of this voluntary liquidation, because the demand, only the returns have been filed, but the demand is yet, or assessment is yet to be done, or demand is yet to be raised by the department.
So if a company's complete all the assets are realized and it is distributed to the stakeholders, then in that case, even if any liability comes out from any side, that actually will remain unpaid even in a normal liquidation or in a voluntary liquidation. So the this cannot be considered as a intent to defraud. The first and foremost is the voluntary liquidator. The liquidator of a company under a voluntary liquidation process is also having the responsibilities of avoidance transaction. The liquidator under a voluntary liquidation process also has the responsibilities of avoidance transaction. He is also supposed to find out. He's also supposed to find out section 43, section 45, section 49, 50, and also fraudulent transactions as per the regulations. So the voluntary liquidation so far has been kind of understated always, whereas it is not this is not a something which is a lower intensity work. The only issue is that it is not commanding any fee, so not many people are interested, but this is a work which involves all the responsibilities and duties of the liquidator. So one, we actually can conclude this way, that the 15 days period where there are no credit claim from the creditors, there is no harm in going ahead with the this amendment. So the only thing that we can further suggest something, what exactly can be further suggested, where actually it can actually kind of quicken the process. So what they have actually added as a paragraph in compliance certificate, that kind of amendment also should be there in the regulations. Just by adding one paragraph in a certificate format would not make it a regulation or a code. So this is one scenario that I just wanted to suggest. And any other suggestion on this part, the list of stakeholders, the kind of distribution where the time has been reduced from 6 months to 30 days, which is 90 days in a normal liquidation process. So these are the two things. And finally, the final submission of the report, which is 90 days in case no claim from the creditors and 270 days in case of such things. My only worry is that these three amendments will genuinely quicken the process. I worry. However, these amendments are not something which is going to harm anyone. It is only like in case the assessment, in case the process is not getting completed, one more application for getting it extended, that would be added in the cost. So therefore, the other things are more important rather than reducing these timelines. Other things are how to resolve the disputed liabilities and how to quickly liquidate the company while the liabilities are still under assessment. These are more important issues. So can we really propose something which is even outside the discussion paper?
I would feel that the period of 90 days is very short, because it all depends on what kind of assets you have in the company. Because if you have got some immovable property or some other asset, it may take more than 90 days to liquidate itself. So considering that within 90 days you have to get a valuation done, and then you have to sell it and recover the money, it's too short.
Also, Anilji, my view is that final report has actually nothing to do with the creditors. Actually, creditors in most of the voluntary liquidators are not much. So the real challenge is the statutory compliances and getting resolved all these pending issues with the departments. So 90 days and 270 days distinction based on creditors' claim actually seems to be not relevant if you ask me for final report.
I'll just give you a small example. I am doing, or rather my team is doing one voluntary liquidation. It has been more than 3 years, we are not able to complete it because we have got one of the shareholders who's a foreign company. Now they had gotten the FDI in the very old regime somewhere in 1980s. RBI is asking list of papers of 1980s, which the corporate debtor does not have. And the NOC from RBI is still not received, because of which we cannot do remittance. It has been almost 3 years today.
See, there are many.
There are no other outside creditors at all in the company. There are only stakeholders. But still, it has taken us almost 3 years. We've liquidated all the assets, got the money in the bank account of the company, but we can't pay. the situation.
Now, this is the via media that we can actually file an application to dissolve the company with making some arrangements like this. So this is only an experiment that I am thinking, because otherwise we are not finding a solution if any such liability is outstanding, which is not a crystallized liability, which may become a liability, because getting an assessment completed is the responsibility of an assessee. May it be a GST assessee or income tax assessee, or any demand which comes from all other statutory authorities will become a liability, or it has to be paid in full, or it has to be appealed against. So in case it is appealed against, then the matter is pending. The liquidation, voluntary liquidation, can take even 10 years. So these amendments, in any case, one amendment is 15 days, then like the other amendment is the distribution, instead of 6 months, it is 30 days. And another amendment is that the final report, 90 days and 270 days. So what should be our response to IBBI?
So for 15 days, we don't have a problem, really speaking, because if there are no outside liabilities, we can make a list of stakeholders within 15 days. But the problem will still come is that what happens if you receive a claim after those 15 days? Then again, we can't set the clock back. Because if you have got an assessment which gets completed thereafter, you'll have to take it into account. And what happens is that if I'm making the distribution within 30 days, I receive a claim thereafter.
Exactly. So basically here the distribution is basically to the equity shareholders who under section 53 are the last one. So once I make that payment, then thereafter all claims of all department, everything is beyond us. Then practically we can't do anything after that.
So that's what I'm saying. To the extent of their distribution, they should be liable to pay whatever liability comes. So they cannot take priority over section 53. These are operational creditors. So they cannot take priority over the operational creditors. The shareholders may be preferential or other. So they actually have to, because see, there is a provision in the regulation already. And I will just show you that provision. And that provision is, maybe it's like regulation 39. No, it's not 39, but then, okay, give me one moment. A return of money. Return of money is regulation 36. A stakeholder shall forthwith return any monies received by him in distribution which he was not entitled to at the time of distribution, or subsequently became not entitled to. So this is a regulation which takes care of this part, that in case the money has to be returned, in case any further liability comes, then he is giving he is governed by regulation 36 to return that money which is distributed to him.
Anilji, I will share a very interesting thing what has happened earlier.
Yes.
Earlier there used to be dividend distribution tax. Now it has become TDS. Now TDS return goes once in a quarter. So practically, if you deduct any TDS in January, so the return can only go on 1st April, not before that.
Right.
Similarly, is with the tax returns, income tax returns. I was just going through handling one voluntary liquidation where this form 16 is to be issued to the employees. Yeah. Now I realize that form 16 can be issued only after the close of the financial year, not before that. So we are just trying to work out if there is any provision of getting these. So basically, these are also considered things which hold the voluntary liquidation.
I think Atulji, form 16 can also be given when a person leaves the organization.
Yes.
That also, because see, when a person is being discharged on the order of commencement of liquidation process, then also, because see, like I have not even seen the workmen discharge. Workmen are not discharged in this case. Because see, this particular order, because see, like, let us try to understand, like, which is that section where the workmen are discharged. That section is not applicable to voluntary liquidation processes. Because see, the discharge thing is coming to like, see, in case we see how the workmen are actually shown as, let us try to find out that section where the workmen and employees are discharged.
I think it's section 14. 14. No, sorry. 30. Commencement of liquidation.
Yeah, 33 only.
Yeah, 33. Yeah.
33 only. I'm just reaching to that section 33. So let us see the order of the liquidation. The order of the liquidation order under this section shall be deemed to be a notice of discharge to the employees. So this section 33 is not applicable to voluntary liquidation.
Yes. Yes.
So it is the corporate person who will decide who is going to stay and who is going to continue.
Right. Right.
So,
no, my question is not that. Anilji, my question is that what happens is, even if I issue form 16 to those people, but my return for salary TDS goes at the end of the financial year for the company.
So I think to all panelists, we understand that the voluntary liquidation process cannot be considered as completed unless all the assessments are done, or we find a via media. It may be income tax assessment, it may be a provident fund, it may be a GST assessment, it may be any other litigation which is going on. Therefore, the IBBI have proposed Form H for Form I, where there is a small paragraph. However, there is no matching regulation in the regulations. I think we are supposed to give that. So they should also come up with a matching regulations. So that is one suggestion that we should give. Like, how can they add that paragraph without having a matching regulation?
Right.
As far as this 15 days is concerned, 90 days, like 30 days for distribution and 90 days and 270 days are concerned, although these are the minimum things, the only thing that this will happen is 90 days is like, it's too less, because in case there is any asset which is to be sold, that asset may take longer time. And now, in case we see, unless we prepare a list of stakeholders now, which is considered to be within 15 days from the last date of submission of claims, in case there are creditors. Sorry. Hello. Yes. Okay. So this is my understanding is, like, should we continue with 90 days, or should we say that the 90 days is not really?
So I would say that 90 days is not really practical. It should be at least 180 days, in my view, where we can safely do the entire process.
Anil, creditors claim should not be linked to creditors claim. The question is, creditors claim does not impact the final report, making of the final report actually.
I think
it is more of the other things which impacted, because if you have to do the entire process, identifying fraudulent transactions, undervalued transactions, everything is not possible within 90 days at all.
Yeah, I think
unless they give a go back call that.
That's a better argument, because this is the responsibility of the liquidator to go ahead and find out the transactions, and so that the transactions are reported. This is a very, very important part. However, like, in case the liquidator will start reporting the transactions, the company will pass another resolution and change the liquidator. So this is also
that may be whatever the company may do. It's whatever is our job, we can't. Responsibilities cannot be.
We can't. I'm just trying to remind all the panelists that the appointment and replacement both are with the
corporate person itself,
with the shareholders, and it can be done in an extraordinary general meeting, or whatever shareholders meeting they can call. It can be done by them.
Yeah, Anilji, in this case, see, even if the shareholders change the liquidator, right now what we are discussing is basically the regulations should not actually restrict the number of days for the liquidator. Whosoever is the liquidator, ultimately 90 days is too short a period to discharge the responsibility which has been casted by the by the code.
Yeah. So when can sale be started? Can it be started from the very first day?
Yes, because this is liquidation, basically.
Unless you don't get a valuation, you can't start the sale because you need to first get the valuation report.
No, the valuation responsibility is not with the liquidator.
Well,
Regulation 35 is not available, not in their voluntary liquidation process, which is there. But valuation is the duty of the corporate person.
One more thing, sir. When the board of directors are meeting, at that time they are placing the valuation while making this declaration. So the valuation report is already there.
That's what I'm saying, sir. I'm also saying the same thing, that the valuation is the duty of the corporate person, and that is before even the declaration is made.
Anilji, as far as liquidating assets is concerned, sir, when you do see legal things, I again repeat that we are again talking on the points on IBC side. Let's go to Income Tax Act section 178. It clearly says that whenever a liquidator is appointed, there is no distinction in income tax whether voluntary or compulsory. But in case of that, under sections 178 of Income Tax Act, it clearly spells out that without the permission or the leave of the Commissioner of Income Tax, the assets cannot be parted. If the assets are parted and in case the payment is short, then liquidator is liable for all the things. We are only reading IBC. The onerous liability will lie on us where we default in other acts also. So I again repeat that all things when we are talking has to be synchronized with the relevant acts which are applicable in the process. If that act does not synchronize with us, only we are saying that our regulator will absolve us of the liability by doing this. But what about other acts when the litigation takes place against us? So these things are unanswered. This number of days reduction, I can only say that in reduction of number of days in all the three cases, if done or whether not done, should not be mandatorily put in. It has to be optional, where the reduction in days, in case there is the matter is such that you can comply with that reduction in days, you comply. But if you put as a mandatory thing, then again, every time you will have to go to adjudicating authority to ask for the extension, which is again going to be a time consuming exercise.
So I think overall conclusion, which is somehow we are trying to reach, is the 90 days is too small. We should say that this 90 days should be increased to 180 days. This is number one. And 270 days remains same as proposed. Distribution, why 6 months? 30 days is enough, because there is a section 36, regulation 36, which also says that the return of money, 30 days should be accepted. 15 days for list of stakeholders is also enough. That's a welcome suggestion, but 90 days is the only thing which is objectionable. See, while Mr. Kamdar, I agree that there are relevant amendments are required in other laws, but I think section 178 is not applicable in case the liquidation is under the insolvency law. That amendment was done under the Income Tax Act. So we can conclude this first part A, which is the review of timelines. Now we can move on to the part B, which is a compliance certificate. In the compliance certificate, it is also said while this the statement of problem is that there is no checklist for whatever the liquidator was supposed to do, whether he has done or not. The too many bulky documents which can be submitted to the adjudicating authority, it is very difficult for the adjudicating authority to verify. It has also been reported to IBBI that some of the adjudicating authorities have also started asking Form H in the case of voluntary liquidations also, and then there is a confusion whether what part is applicable, what part is not applicable to voluntary liquidations. Therefore, the Form I has been proposed. So it is a comparable provision with the section 39, with regulation 39, sub-regulation 4 of CIRP regulations, and also with the regulation 45 of liquidation process regulations. So the proposed regulation is that this on the line of the compliance certificate under CIRP or under liquidation regulations, there will be a compliance certificate required under voluntary liquidation regulations also, and that form is Form I, and this is the be reached out. So in case we see this Form I where the comments are required, the Form I which is proposed is very, very lengthy. And very lengthy, like it also says that the opening of the bank account, notice of on-called capital, information to all the statutory authorities. And so there are some responsibilities. There are some responsibilities which is now shown in Form I, but which is not found in regulations or in the code, like intimation to statutory authorities. I could not see any specific regulations which says that the liquidator has a responsibility to intimate all these statutory authorities. This corporate liquidation account is something which the IBBI will take away money in case it is not disbursed or not claimed. Net worth of the person, reasons for sale of assets, refund from statutory authorities, realization of on-call. Then these are all realization of security, liquidation cost, workmen, debt of secured. This is all section 53 waterfall arrangement, which is shown here. Voluntary liquidation process has been conducted as per stipulated timeline. So now this is T, like this is T minus 28. So this 90 days starts from the date of passing of the resolution. The 90 days, now 90 days or 270 days starts from the passing of the resolution. Then approval of the creditors within 7 days, intimation the intimation to IBBI within 3 days, public announcement within 5 days. Then the registrar of companies should be informed within 7 or 14 days after the creditor's consent. Submission of claim is 30 days, T plus 30. So T plus 30 is that is inclusive of that 5 days. T is the date on which the claims are received. I think that has to be seen. That has to be seen within 30 days from the commencement, or from the 30 within, yes, it is from the commencement. Withdrawal of the claim, they can withdraw the claim. Section 38 subsection 5 is applicable, so they can withdraw the claim within 14 days. Preliminary report 45 days. Verification of the claims 60 days, and intimation about decision of the acceptance rejection next 7 days. And preparation of list of stakeholders, it's 45 days. In the case of no creditors, otherwise 75 days. So now what is scenario? The scenario is that can asset be sold before even the list of stakeholders is filed? That is something which is in a normal liquidation process. The assets cannot be sold before preliminary report is filed, asset memorandum is filed, and the list of stakeholders are filed. However, in the case of voluntary liquidation process, I think it is the list of stakeholders which is required to be filed. Then the assets can be sold. Appeal by creditor against the rejection, distribution of the proceeds, date of realization plus 30 days, date of amount of unclaimed dividend prior to submission of final application under section 7 means final report, submission of final report, completion of voluntary liquidation, 90 days or 270 days, meeting of contributories and presentation of status report within 15 days of the last final report. So this is the Form I. Following are the derivation. These are the deviations which are supposed to be reported, the deviation in the timeline, deviation in the process, and finally this 9 number, which is there. All other clauses are same. So this is a something which is Form I. However, there is no mention. On the obligation of the liquidator under section 43, 45, 49, 50, and also some fraudulent transactions. There is no mention. So that actually, when we say that these sections are applicable, how can this compliance certificate would not ask for this kind of report? We need to bring this to the knowledge of the IBBI that this is missing, and this is also missing attention. when this code says very clearly, I will again take you to that place. The code says very clearly in section 59, the code says very clearly that the provisions of section 35 to 53 of chapter 3 of chapter 7 shall apply to voluntary liquidation proceedings for corporate person with such modification as may be necessary. Now let us say, is there any modification which is there? I have not seen any modification in the only thing is there is, let us see what is the no regulation for preference under valuation, undervalued transactions. There is nothing which is for undervaluation. So extortionate and fraudulent. Extortionate credit transaction, it is the same definition, and that means that the liquidator is supposed to take actions for extortionate credit transactions. Then is the fraudulent transactions. Detection of fraud or insolvency. This is regulation 40. The liquidator is of the opinion that the liquidation is being done to defraud a person. He shall make an application to the adjudicating authority to suspend the process of liquidation and pass any other order. That's this part of it. However, there is nothing which is for undervaluation transaction. There is nothing which is for preferential transactions, and there is nothing for the section 49 transactions which are with the intent of defrauding. So although the form I has been introduced, but to my understanding, this form I is incomplete. Let us open the discussion on this. We have 30 minutes to close this discussion. Yes, please. Anuradha ji.
Sir. Sir, Form I, since it is issued as a part of the regulation itself, it is an amendment or substitution of Regulation 38, Sub-Regulation 3.
Right.
Along with the final report, compliance certificate has to be now submitted.
Right.
So when you said that there is no regulation to it, so is it not compliant with the regulation? I understand there is no corresponding section, but isn't it as per the regulation itself?
No, I said this, there is no item which is covering the duties of the liquidator under section 43, 45, 49 and 50. That part is missing. That part is missing in the compliance certificate. My observation is this only.
Anilji, maybe sorry.
Yes, sir.
No, I agree, Anilji, I agree with you on this point. It is missing.
I think we should report to IBBI that this is a very, very important part which is missing out of this compliance certificate.
Yeah, Anilji, there could be a possibility that in all those 1,000 odd cases of voluntary liquidation which have been filed, maybe not even a single application has been made under any of these sections.
I also think so. Reason is that like the voluntary liquidation processes are being taken as something which is a very, very kind of casual assignments by many. This single line which is written in the section 59 that actually casts all the responsibilities on the liquidator, because all the duties, whatever is mentioned in section 35 to section 53, all has to be complied with by the liquidator. However, the attention has not gone to that extent. Therefore, even the IBBI is missing out of it.
Apart from it, I also have a reservation on the use of word compliance certificate. This is Form I. It has to be addressed as Form I, which may be considered as a compliance form, but a word certificate, whereby again it has its own legal issues. When you have to give the details which are very specific, and when there are certain things like if you go to the last page of the thing, compliance certificate, where you have to give to AA certain things in addition to this, as you rightly said in the first part when we were discussing. So there, I have a reservation on the usage of word certificate for giving this form to them. Date of intimation is okay. Last part of the thing, sir.
I think this is certainly the kind of certificate which is already accepted by all the insolvency professionals in CIRP regulations and in the liquidation process regulations. It is a similar certificate, and it says, I have a certificate that the content of this certificate are true and correct. And the regulations 8 and 10 shall be preserved. These are recording the records. So this part,
Yes,
whether it has been provided for or not,
right.
This needs to, because this is a certificate now which is being asked from the liquidator, and the liquidator cannot give this certificate as a blank certificate without making provision for all that liability which may come in future.
Right.
And whether it is sufficiently meet, because tomorrow under assessment, if the income tax department disallows certain expenses, etc., then your liability may go up substantially.
Exactly.
Now, how can you can make a provision based on whatever records you have submitted? What the assessing officer may add, how can you determine that?
So therefore, the certificate or the provisions that the adjudicating authority can make is only subject to the maximum of the disbursement made to the stakeholders. And the rest of the amount would be a loss to the claimants.
Yes.
So this is the Form I, where we need to propose that the obligations of the liquidator, which are similar to the liquidation process regulations, are missing. And especially in those cases where, because see, in these cases, there is no CIRP regulations. In a normal process of liquidation, the liquidator can always depend upon the actions taken by the RP for perfect transactions. However, in this case, the perfect transaction is the responsibility of the liquidator only, because there is no RP in this case.
To that extent, they will have to amend the Form I to include all those.
Yes, yes.
Anilji, also this point number 9, instead of this being a blanket certificate, this should be incorporated in the table itself, wherein the details of what all liabilities the provisions have been considered and what arrangement has been made. So let it be specific rather than giving a blanket certificate like this in clause 9.
I think
So
that
why
also
do
can
we
be a
want
suggestion.
certificate to be given only, sir? Let it be a form which is to be filed instead of certificate, no?
So
why we liquidators should take the onus of these liabilities by giving certificates, sir?
No, see, basically, if I am disclosing that these are, as per me, these are the 5 contingent liabilities, and against this much payment has been made to the stakeholders, and they have, here is the certificate of the stakeholders who have agreed to contribute to the extent of the amount disbursed to them, and this is my arrangement. Now I can certify this, but I cannot certify whether it is sufficient or not.
सर मैं तो बोल रहा हूँ सर्टिफाई क्यों कर रहे हैं हम क्यों अपने पे प्रेशर ले रहे हैं सर्टिफाई का? Why do you want to certify? Let it come as a form and file. Instead of certificate, let it be just a form, and we will file the form. We will file all these disclosures, whatever they want. We will file. Why do you or me? Look, we have always been doing this just because we have learned one law, and that law says this. There are other laws which comes when you go to the judiciary. The certificate is a very when you certify about the facts that are true and correct, means you don't have any leverage to move out. If you are filing a form and there are some issues or some mistakes, you have a leverage in judiciary. When you go, this is a testimony that you are giving by way of certificate. So there, I have my reservation. Even last time when the compliance certificate was discussed in the round table, I had raised my observation, but it is a different thing that it has sailed through. But here again, we have a chance. At least we as a liquidator should try to see that we disclose everything. There should be transparency. but we don't take the onus of certification things on ourselves. If that is to be certified, let the some other authority be there to certify. Why we carry that responsibility along with us?
Yeah, or can we suggest that this compliance certificate, if it may be called as a certificate, should be given by the corporate person and not the liquidator?
No. There could be another way of looking at it, that we call this, instead of compliance certificate, we call it format of final report. So let it be a report rather than a certificate.
Yes. Yes.
Although when this IBBI started the discussion, it started with a kind of checklist. And when they finally made it, they made it as a certificate.
So what is happening? We are always being
or we can continue to call it a checklist. That is not a problem.
Sorry?
We can continue to call it a checklist.
Yeah, checklist for final report. Checklist to be attached to the final report.
The word certificate and giving the that all that are true and correct to the best of my knowledge and belief. Because this thing are very tricky when you are questioned in the front of the judiciary. And we are not a legal person to fight out the things on this single word. So why don't we, they absolve us on these things by every certificate on us. We become scapegoat because of these certificates. Everywhere we have been made liable, and every other stakeholder in the IBC pillar is walking freely. Only we are taken to task on these lines. So we should try and object on the things where certification comes. If they want, get it verified and get certified by some other authority, whosoever they want, appoint it and get it done. We should not give these certificates, is my personal view.
We can call it a summary report also, sir, otherwise. Wherein we are just giving the gist of what all has happened from day one till the date of application.
Right. Anil ji.
So I think the organizers may note down that this, to my understanding, the compliance certificate is already accepted in CIRP. It is already accepted in the liquidation processes by all the insolvency professionals. So this will be considered as the law by tradition. So this also would be a law as a tradition. However, as far as this clause 9 is concerned, this only should be considered as a narrating of the facts, and it should be there in the upper columns, which are carrying all the facts. But it should not be separately considered as a paragraph which is signed by the liquidator. One thing I would like to share with all the panelists is that the word liquidator, the name liquidator, is the same for both processes. And so whatever obligations and the duties are there in section 35 to section 53, all those are applicable to liquidator. And
sir, but it is subject to modification. So maybe we can suggest this modification, because 35 to 53 applicability, they say wherever modifications are required. So we can
so the modifications are only mentioned in the regulations. And it is not many. And I have gone through regulations. You also have gone through regulations.
Yes, sir.
I could not see anything which is
no, sir. Now we can propose, I'm telling, instead of calling it as a compliance certificate, maybe a summary report or something. So this can be a, like, you're telling that it is by tradition that we have accepted the compliance certificate. But as we know, for the CIRP and the liquidation process, the beginning itself is with the consent of AA. But here in voluntary liquidation, we are going at the end stage, where after we have finished everything, and then we are going for dissolution. So this,
what is more important for the profession, for the growth of the profession. But the profession should not shy away in taking the responsibilities. Rather, the professionals should try to highlight these responsibilities, and accordingly, the professionals should ask for the requisite fee. So the situation is that in case we shy away the responsibilities, then of course, like there are lawyers, they will never give an opinion because they give an opinion under their signature. Similarly, otherwise there are protections available for RP and the liquidator under the code. Now, in case we try to say to the IBBI that we shy away in taking the responsibilities, rather than saying that I feel, rather we should advocate the kind of requirements, the intense requirement of buffet transactions, and we should accordingly sensitize the professionals so that they don't accept a voluntary liquidation assignment just for 1 lakh of rupees for the entire assignment, or maybe it takes 2 years or 3 years. That sensitization is more important rather than shying away with the responsibilities. I need opinion on this, because see, like, rather than saying to IBBI that you should exclude this part, we should say that more and more responsibilities should be included in this certificate, so that it is highlighted, the matter is sensitized amongst the professionals that this is your responsibility. Don't take it casually. Don't take it as an assignment of 1 lakh for the entire assignment. This is what is my understanding.
Sir, I differ, sir. Basically, by doing this, we are just taking the onus of all running the whole show on our head, where everyone is getting sidelined. So compliance in the case of CRP, in case of liquidation, which is now there also I had my reservation, and still regulations. Look, I suggest that regulations are directive in nature, mandatory is the law. These all comes through regulation. These all form certificates are coming through regulation. That there is nothing in the law that is being changed on this line. So regulations can always be challenged. They can always be taken to the judiciary, and the law will prevail. So in this case, also I again request if all the IPs, if we are ready to shoulder responsibility, and we are shouldering the responsibility, but making this mandatory thing by taking certificates for small issues also, we are cutting our hands down by doing this, which is not required at this point of time, when the law is still evolving to a great extent, where the things are still not clear amongst the regulators and the various other statutory authorities, where the judiciary is still coming out with new directions which are completely separate from the previous direction or previously how the law we considered settled. In that case, we cannot shoulder the responsibility on take the responsibility of all the doings by giving this certificate, is what I am very clear of my view.
So this extent of certificate, I agree with Kamdar sir.
Yes, Mittal Saab.
Certificate, if we can avoid this certificate, definitely we should, because I think the intent is to, this is more like a checklist of my final report, because my final report is exactly this. See, basically when I am submitting a final report in a voluntary liquidation, practically I am giving details about all these things along with annexures. So this is not a certificate, this is in fact a format of a final report. So I would suggest that if we can call it a final report format, it will be more inclusive, and then people will have liberty to add more things relating to their specific cases. But once it's become a certificate, then the flexibility in this report will go away practically.
So fair enough. I believe the JIPA association should respond to the IBBI in such manner that this is what is the conclusion, that the discussions of the panelists finally resolved that this should not be a certificate, rather it should be a kind of narration of facts. This is one suggestion which is almost concluded. So what exactly, I think in case there are participants, and in case we can open some question answer session, what are the yes,
Anilji, just a moment. I think we have agreed on 3 amendments. One is the name of this report. Second is including PUFE, which has been left out. And third is regarding this column 9, we make it specific rather than a general certificate.
Right.
Yeah.
And on the part A, we are saying that this 90 days is too small.
Yes.
Yes, 90 days needs to be changed to 180 days.
180 days.
So wonderful that we actually have deliberated on these two, part A and part B. So JIPA association has got our opinion, and they can also use their own study and their own understanding, and they, accordingly they can recommend. So in case out of the participants, if there is any doubt that any participant has on the discussions that we have done.
Sir, I have a question.
Yes, please.
Sir, matlab, till date, I'm also practicing IP and a chartered accountant. And till date, I was under the impression that, voluntary liquidation means that the company does not have any business and it no longer wants to operate anything. And then therefore, it does not have any meaningful assets and the liabilities are there. Now the company, the stakeholders want to exit from the company. And so it just it just wind up all the assets, bank में balance आ जाएंगे, and then उसके बाद एक voluntary liquidator को बैठा करके either it can go by STK2 form, और अगर उसमें नहीं जा सकते तो it can go through voluntary liquidation. But now you have familiarized us with the clause section 79 of the code. And that is saying that the liquidator has to step into the shoes of all the clauses which is done in the normal liquidation proceedings. So you mean to say that liquidator has to go 2 years accounts, he has to see, and he has to find the preferential transaction, report those transactions. Does he also have to do all these work?
This is what the section is saying. Even I'm actually taking you to the another part, and that part is the beneficial liquidation. Now, in this case, like when this section 35 is 35 is applicable to voluntary liquidations, to carry on the business of the corporate debtor for its beneficial liquidation. This is also responsibility of a liquidator. So if a company is in operations also will be done by the liquidator. Section 35.
And sir,
is
what about the
applicable.
fees? Like section 753 mein liquidation ka fees is tied up to the liquidation proceeds, but in voluntary liquidation it is there is no mention of any such kind. The
Now,
fees
then,
are not.
then I take you to regulation 4 of the voluntary liquidation regulations. It says that the corporate person shall from the liquidation commencement date ceases to carry on its business except as far as required for beneficial winding up of its business. So therefore, the liquidator even may be required to continue the business if it is required for the beneficial winding up. So I have given you section 35, I have given you regulation 4. So don't consider this liquidation, voluntary liquidation is not a smaller assignment. You can
far as the fees point, what Madam was raising, the fee is not fee is basically what it is up to your negotiation when you take the assignment, or as per the chart, you can always have that two things together. So
there is no chart here. There is no chart. There is no chart for this. There is no chart for the voluntary liquidation.
No. So here, what she said that the payment that is to be made of the fees is not linked with the assets. So basically, what involuntary is people are doing are charging a lump sum fees, to my understanding, in most of the cases.
Right.
So there, whatever model you want, it is up to you. When you are getting engaged, you have to put your remuneration structure to them and take the fees.
So this is only required when we sensitize these issues, that these are the responsibilities when we do voluntary liquidation. We have to be sensitive. We need to sensitize all this.
Very true, sir. And I completely agree with a compliance checklist, we can say, instead of compliance certificate.
Yeah. So any other question from the participants, and then I think we can conclude already 12:55, and I think the last 5 minutes we have to give it to Praveen ji and other organizers, and we actually have to see whether our the guest of honor is available, Mr. Chugh, or he is already left.
It was a wonderful session, and to sum it up, I think we have four conclusions have been received. That is, number one, that 90 days period is not enough in part A. Secondly, the POF transaction is missing. Thirdly, that point number 9 should be made point of the checklist itself, form I. and not as a separate certificate by the liquidator, and that compliance, instead of compliance certificate, we should use it as compliance checklist or any other word. Please correct me if I'm missing on any points.
I think in part A is only one thing, that this 90 days is
90
too
days.
small. Otherwise, it is all you've taken well.
Yeah, over to Praveen ji. Praveen ji.
Yeah,
yes, madam.
I have one question, please.
Yeah, please. Ashwini ji. Huh.
Yeah, as the Kamdar ji raised the question regarding the income tax no due certificate, suppose as a liquidator we made a request to the income tax department for their liability. They had not given their no due certificate, and the period for claim of creditor is also end. Then what we will do?
See, if the period of claim is ending, assessments of the company is pending. Like, see, in case there is any existing demand, for any existing demand, the claim cannot be received after the period of receiving claim is expired. However, in case the demand is not crystallized, that the demand is crystallized after the liquidation commencement date, or demand is even like still pending to be crystallized, if there is any demand, we are only discussing that. For that reason, the IBBA has already given a circular on maybe 15th of November 2021 that the insolvency professionals are not required to go for the income tax no due certificate, and you can still file your application for final report and final dissolution of the company. So the NOC is not required from the income tax department. Our only issue is that the whatever pending demands may be, whatever apprehensions that the liquidator will have regarding the future demands which may come on the company for all the pending matters, that has to be reported to the adjudicating authority along with appropriate provisions and obligations. This is what is the understanding that we have achieved from this proposed Form I.
Okay, sir. Thank you.
Any other questions? We can still pick up the questions. If anyone have questions, please raise your hand, or you can even unmute yourself. I don't think that there are any. Arvind ji, you want to say something? Okay, Parveen ji, you can now take up the.
Okay, sir. Okay, madam. Now we can say that session will be fruitful, and we must make sessions to RBI as summarized by our panelist and under the command of Sri Anil Goyal ji, with along with the other panelists, and we also appreciate our moderator and participant also. Once again, very thankful, and also invite Sri Advocate Rahul Goyal ji to give a lot of thanks to all. Rahul ji.
Thank you, Praveen ji. I really appreciate that everyone has discussed such a point, each and every point very effectively, and the summarize of the points which have been bring out. It will be, I hope, in future it will solve all the problems of the timeline regarding the voluntary liquidation, and the things will the purpose of all the act is always there that the things should get solved easily within the time, and if the things not solved within the time, that as the one of the panelists has shared his experience that he's facing the voluntary liquidation from past 3 years. And so these are the best example which shows that the motive of the act is defeated. But I hope that after all these discussions and headed by Mr. Anil ji and everyone with all their knowledge and wisdom has discussed and shared their problems up to which we are facing day to day. So with all the great panelists we have today, I really thanks to everyone for giving their valuable time, and I hope in future we will definitely solve this issue and with further more discussions. Thank you to everyone.
Thank you.
Thank you very much, Rahul. Thank you very much.
Thank you.
Thank you. Thank you, Jeepa.
It's a good.
Thank you.
This JEEPA association, in fact, is doing a wonderful job conducting such webinars almost every day. So thank you, Praveen ji, for giving us the opportunity.
Thank you, sir.
very
Thank you,
much.
sir, a lot of for your commendable management also. Thank you, sir.
Thank you.
Thank you, everyone.
Thank you so much,
Thank you to
everyone.
every panelist and
Thank you for that.
participant.
Yeah.
Thank you.
Thank you so much.
Thank you,
all.
Rashmi ji,
Thank you,
Pooja
Praveen
ji, and
Thank you.
Vijay ji,
Thank you.
and Atul Mittal ji, Rahul ji, and everyone. Thank you so much.
Thank you, Janta.
Thank you. We had a lovely session.
Thank you, Anuradha ji. Thank you. Thank you. Namaskar.
Thank you, sir.
And of the meeting. And meeting for all.